Hello guys, welcome to the Trading Parrot. As if it wasn't enough with the market shake-off on Monday, on Wednesday we got incoming the Federal Reserve interest rate decision. And as we are speaking, we might be settling a 4-hour breakout to the upside. I covered that already in the video early in the morning, but I want to go a little bit deeper in this video. We're going to look into actual data and see if we can sustain the theory of a breakout bullish, because let's face it guys, we have done a correction move to the downside, we have done an A, B, and we definitely need to be on the defense in case we got a C wave incoming to 96k to spoil the party. And since we are almost doing that breakout, it's definitely worth it looking into alternative sources of data and do an X-ray scan of the market. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. On Saturday we were so close to 900 likes, and then with the AI sell-off from Monday we dropped to 700, and I know we can make it to 1,000 likes in a single video about Bitcoin. With your help, definitely that is possible. Let's get into the data. With the recent sell-off, Bitcoin and Ethereum behave pretty different. Remember that we have profit takers on the 23rd of January that started distributing right at 103.6. If you follow my line, a couple of days after, Ethereum started distributing at 3.3k. Those were profit takers, people that were already entering possibly below 3,000 and then distributing $400 up, and that's just it. With this initial capitulation, the effect on the activity on Bitcoin and Ethereum is very interesting. You can tell that Bitcoin didn't reach the bottom of the band like Ethereum did. So Ethereum, we can say, had a much larger overreaction towards this event, and that is understandable because 1, Ethereum hasn't performed that good, 2, Ethereum and any altcoin tends to magnify the effects of any potential downside on Bitcoin. And the upside of this is that being so close to this band at 0.97 means that many people on Ethereum capitulate at these prices of 3,000, closing at a loss. The closer you get to the lower band, you're closing at a loss, and the higher you get into the top band, you're taking profits. And we can always analyze these moves to understand whether we are getting close to a top or closer to a bottom. Independently of all the fears that we saw in the market, in the rest of the video I'm gonna show you that this recent move in Monday really didn't change anything from many point of views, contrarian to what many influencers were saying, that we are dumping, we are in a heavy dump, that capitulation event or anything. I mean, if we were in 2021, dumping will look like this, pretty much. And these days, you can tell on the 24th of January, we were at 31 billion. And that massive capitulation that everybody's talking about just took us to 30.2 billion. We're pretty much in the middle of the range. We've been here ranging on open interest since November. An actual capitulation must break below this flag, test it as resistance, and then you get finally blood in the streets, which Bitcoin in a year like 2025 post-halving tends to do it in the summer. That is the trend, it's the past performance, it's what many people have in the back of their heads, but it's not guaranteed. Let's go on the weekly basis and let's see this recent move up. How good is it making the candle patterns look like? Let's remember that some people are still observing this as an in-progress M pattern. Shorts are hoping that we can complete this pattern like this, get to the neckline of 94 and then dump into 80k. So we need to accept that that could still happen. Just by looking at these candles, it is definitely not impossible for the weekly candle to come back down or even close there and the next week complete the full formation. We have to be flexible with that potential downside and not discard it and take the risk that it will never happen. Particularly because we are on the weekly on a channel to the downside, we have done heroic efforts to reclaim it 2 weeks in a row. You can see in the price action, those are the 2 weeks that we did that. And currently we are doing a third attempt, which is definitely not guaranteed. It could still push us back down and put a lower low on the weekly. And if I don't make you aware of this, you're gonna say, why you never put that on the table for our awareness? That is kind of my job. My job is not to tell you you that there is a guaranteed direction in the price, because that is pretty much ridiculous to think. You don't profit from certainties in trading. You actually get wrecked when you marry a particular direction. If that is too difficult to understand, I encourage you to continue watching the videos until eventually by osmosis you absorb the ideas and you make it yours, hopefully, and then you can profit like many people have done in the channel without depending on certainties. Alright, bullish case. Can we break above this? The answer might be no, but I think it is still possible. So far, we are on Tuesday, early in the week, just 2 days. We have 5 days to complete this, but doing a very early weekly analysis, I think that this candle, if it continued and managed to close once again above that resistance of 104.4 on the weekly basis, putting the highest closing price on a weekly candle in the whole history of Bitcoin, definitely that's something that the bears are gonna have to respect if it plays out. On the contrarian, if we close in here, that is just mildly bullish. It's promising in either direction. If we close below 98.2, the bears are gonna get too cocky. They're gonna push the price below 93.6 and they're gonna try to aim for that 80. Whether they can get the full target or just a mild lower low, call it the 88k where I had my order from before, and then not achieve the full target, well, that all depends on how much liquidity we build as we fall, if we fall in that direction. But let's not get ahead of ourselves. Let's leave that for later. If we encounter ourselves in this situation, we will do the due diligence analysis. Going into the daily chart, we can see that the pinch we did on this support was really by the dollar. We call it as soon as it happened, and in the video yesterday I told you I bought 98k and I add to my long. So I have managed to increase a little bit the volume at the cost of a slightly higher risk at the moment for my swing trade position. And going back into the MACD that we called yesterday, that I was pretty annoyed that we are putting one again, thanks to this candle pushing back up, similarly to this one in here, we managed to close the daily without the bearish cross. You can see it in the data window. If I move the head, it's 1834 versus 1726, which means that the blue is still above the orange. And as of today, we are right now $7 dodging the bearish cross. So if price managed to close roughly around the 103 or higher, then we dodge the bullet of the bearish cross. Anywhere below 103 is very likely that we settle it, and that's the 5th bearish cross since November. And today's start of the show, my full attention is on the 4-hour time frame, because yesterday we were calling something a bit more mild as a recovery, and I was pointing towards an RSI of 46 somewhere in here. I was thinking Tuesday or Wednesday to hit resistance, but we managed to get there right on Monday. At some point the intra candle test an RSI of 50, and we can see it in here. That was Monday. Very quickly in a single 4-hour candle we went straight into resistance that pushed us back down into 98.8, proving that that was resistance. But the bulls remain persistent. We managed to close at 102 and we started rolling over at around 103. Indeed, this should have been 50 because of the speed of the price going into that resistance. We didn't do it late at 46 here. We did it very early. Therefore, the real resistance is 103. And at the moment, that is an ongoing battle. You can see the battle if I zoom in here. And I left you this on the video yesterday, and I'm gonna leave it there because that is what we need to do to confirm this global breakout on the 4-hour. Targets, if we confirm the close above it and then we retest and we don't do a horrible C wave as I talk in my video, let's face it, this is resistance and you might be rejected and put another leg down into 95. So we are gonna have this 95. We're gonna look what is the motivation to do that, and we are also going to assess motivation in here at 105, 107, and all the fair value gaps that are in this area. We're gonna cover all of that together with the order book, and you there watching the video, you are gonna make the decision decision. You're gonna decide whether it's too much risk, whether you wanna close your swing trade. I enter at 98. You make your decision, I make mine. We all have different risk aversion. Daily analysis. This is the RSI, and you can tell that yesterday the RSI daily was pinching like this. We were breaking down. At the end of the day, the intra-candle move managed to close that precisely at support. So this line in here, I was tempted to say now it's gonna get broken, it's not worth keeping it. It is definitely worth keeping. You can tell how precisely we close at daily support, and that is positive so far. This is not a guarantee that we don't do this, but we are increasing those chances that we can tackle the next resistance. And I'm not gonna call for 68 or going straight back into the boss line that we have been using since August, but I'm gonna talk about a more conservative target, possibly 64 around this area. So I'm gonna draw a line like this and say that if today we manage to hold in here at 53, there is a higher chances that we hit the resistance in a similar fashion that we did on the 4-hour time frame. Let's also remember that there is at 65 in here a double top. So coming back there and trying it once again, then seeing how we react to that, and then see if we can go for 71 could be a great plan. So 64 is resistance daily, 53 is support. We already have 54. Let's drop it to 53, and let's change this now to the more conservative 64. And that 35 coming from the PNR level, we're gonna just leave it there at the same value in case we lose the support. You can tell that yesterday we managed to regain daily support, and that in the price action is also evident. So that point of control, the proximity to that, the most traded area, kind of saved the day. And of course, if we hit the top of the range at 104 and it becomes daily resistance and we just manage to take that fair value gap in there, we could experience that continuation of the leg down of the C wave on the 4-hour. So watch out for the resistance on the daily as well, which is located a little bit higher at 104, right there at the top of the range. That is the initial challenge for the daily, but the full target of the daily resistance at the moment is 107.7. So keep those targets in mind because they're gonna pop up with motivation later in the video. That 35 is at the moment 91k, coinciding with this order block. Now we are not talking about the lower order block at 87 anymore based on this price action. Talking about the CME gap, which is also part of the start of the show today, because we left the CME gap. People think CME gaps are not worth talking about, and I encourage you to look at them a little bit longer, because if you look at the past performance, they are very impressive. And so far we have filled a good chunk of the whole liquidity. There is a CME gap of 4.7k, and so far we have taken 3.2, and there is a leftover of 1400 on the table to be taken. Do we sometimes fill partially CME gaps? Yes. But I think there is a high likelihood that we fill it fully. Of course, I'll be surprised if we don't. Now, the Big Well Explorer is at 0.30. That is definitely the lowest value we have ever had since pretty much early 2023. And that means that they are patiently withdrawing at small amounts and outpacing the deposits. And these are large wells, and that's why we care about them. The visualization that you're seeing in here, I call it Big Well Explorer, but it's some sort of stochastic apply into a mathematical formula using large holders, inflows versus outflows from into the block as a source. Yesterday, there was a big inflow on the Bitcoin ETF. I suspect that was all to do with the fears coming from the market shake-off we had on Monday. I do believe that AI is a bubble and eventually it's gonna pop. I don't have a crystal ball to tell you when precisely it's gonna happen. I'm gonna probably do a separate video on stocks. I know many of you care about stocks and believe just like me that they do influence crypto and Bitcoin, being the bigger brother of this tiny baby that is crypto. But maybe having it in a separate video is better for me to understand how many of you care about stocks. So wait for a separate video on that. Grid index is at the moment at 72. Long-term hold holders during this move down didn't really do anything, and that is positive. There was just a tiny selling here, but it's not really even worth mentioning. I suspect they didn't buy the idea of a real market crash at this time. You can see it with the move to 103.2, shorts have started being liquidated, but liquidations daily are way below the almost 1 billion that we had yesterday in the full 24 hours. With this move up, you can tell that liquidity on the upside going up into this area really is not happening because of excessive amount of shorts in here. We have barely blue liquidity, which is the reason why I'm tempted to think that 103k resistance, the price might be coming just to that resistance to try to trap further longs to get them liquidated at the 95, 97, making this more substantial. But so far in the short term, I am not seeing this growing that much. You can see some yellow that is coming in starting at 6 p.m. yesterday, but it's not really going red. So I'm not gonna discard it, but I'm just gonna argue that if this is a bull trap, they're making a terrible job at trapping longs at the lower end, as opposed to all these shorts that are still there, completely convinced, not closing their short, their liquidity is still there, which is, from a point of view of short-term liquidity, much more attractive than this. And that is an isolated statement, just looking at this chart, ignoring the rest of the things. It's not the final forecast, don't get confused. On the longer term, you can tell that this 95 has a peak of liquidity that is definitely more attractive than going just to 107. So it tells me if we go to 107, why bothering going there if we are not gonna take 110 in this there? If you just wanna go to 107, save your effort and just go to 95, which in the long term is better than just going here, right? There's just a blue there. Now, if we start going higher and we get there, why leaving on the table the red? So this is just brainstorming the liquidity, and you should do this exercise as well. Take a screenshot and spend some minutes trying to understand this and connect it with the rest of the data. My final outcome is I believe we still have on the table these levels that we talked about on Saturday until I get completely proven wrong. Being above 100k to me is still making it possible. And let's go with the order book and let's start digging into the alpha from yesterday, and the reasons why I add to my long at those levels are very clear. I told you at the end of the video that funding rates being in the negative, overlapping with high bidding activity, means that the shorts are at excessive risk and the longs are with a huge appetite to enter around that area. Now that has flipped into the red because we are hitting the resistance. It means that it's not guaranteed it's gonna get rejected there, but this obviously an ongoing battle, and treat it as resistance is confirmed. It is there. It's going to be tough to battle that level, and we should be keeping an eye on it. You can tell that even with the move up, that has actually attracted further shorts. So that supports my statement that they are doing a terrible job at attracting longs to complete the C wave to the downside, and instead of that, we get an excessive amount of shorts. And the cumulative delta, I'm sure that they have an issue here. This cannot be $13 billion in delta. That's definitely some sort of issue they are having. I'm gonna refresh, and now I'm getting a more believable 452,000 in delta, which is considerable. The selling wall at 110 is now 103 million, a little bit less. Let's see if we reduce now the percentile to 99. We can tell that the support was that 99k. The purple wells are pointing down, which is a little bit concerning here at the resistance. I'm gonna give you that. That is a data point a bit bearish in this area to see that the purple wells are closing potentially positions on the long side. In terms of liquidations in this area, you can tell that we didn't make it to the typical value of minus 300 as we did in here and multiple times in the past. And I suspect because at this level we were at 99.5k and we already liquidated a lot of people here just a few days after we went to the same level. So that is basically hitting just the people that are slightly below that. So that 99.5 and then we went to 97.6 makes a small delta in price, and I suspect that only those contributed substantially to this amount of liquidations. In short terms, the people that got liquidated in here were not again liquidated, and that's why this is so small relative to this. We are still in the red, so that means that we still have excessive amounts of shorts, but we haven't gone into the high value area. If we go into this high value area, my position probably is gonna start entering into the drawdown, and I'm gonna start thinking to add more into the value, expecting this eventually to break out from here, which will be really sweet to continue riding the long with additional volume with a third order into the top of the longs. You can tell that 91 continues to be there, the cushion where everybody wants to long. I'm not sure if they're really gonna get a C wave that long into 90k. Most of the times these levels represent the people that end up getting disappointed. Liquidation levels of the past 30 days, we got 105.7. That is around the area of the CME gap. This 107.8, it's coinciding with the beginning of the red from the shorts, definitely the highest accumulation and the most dense one. And then you got 109.5, which has been the highest for the past weeks. And then all this area that is very shallow at the moment. To attack the longs and to take decent liquidity, price needs to really go to 98 and 96 to take something decent to make it worth the move down, and that is a move more or less of 6 to 8k down. In here we just need to move 2.7k and we get to close the CME gap, the fair value gaps, and the first initial liquidation, which is more or less the same size as this. So take that as well as an important data point. On fair value gaps above the price, we have already consumed everything that we built during the crash. You can tell that on Monday we were talking about these 3 fair value gaps starting from 99.5, and you can tell that in the next candle we took already 2. That was right after the video, and then we came back down and the bulls stepped back in, took the remaining part, and at the moment they are facing the one that starts from 103.3 into 104.8. There's a very thin one here at 105.6, but really the chunky one ends right below 105. We got this one there below the price. I'm gonna just adjust it. So the most important takeaways and summary in my position, if you care about it, is that at the moment I'm riding my swing position with additional volume into this resistance, and I'm on the lookout for how this reacts, whether we're gonna get a new lower low with a C wave, and preparing for that potential outcome in case I need to add additional volume, or if we do that breakout and confirmation, we can ride it all the way to 105, and in that case I might reduce at 105 if I see weakness there, but always with a keen eye on continuation into 107, just because there's so much liquidity there as well. And it seems to me that price always wanted to go there, but the general markets kind of put a pause into that plan. So my strategy now is to keep an eye on the price to see if that's still the plan. Make sure that you're following me on Telegram, Instagram, and Twitter, because the very time sensitive updates on the price action are all going to go there first. Guys, if you want to trade Bitcoin or altcoins, consider opening an account on either Bybit or OKX. These are my 2 preferred exchanges when it comes to different products. The amount of altcoins combined between these 2 exchanges is very extensive, and they are offering exclusive rewards if you use the links in the description to open that account. 60,000 on OKX, 30,000 on Bybit. If you want to open a new account on an exchange that doesn't require KYC, meaning that you can open as many accounts as you want with different emails, not needing a VPN to access it, not having issues withdrawing or deposit crypto, then you can use my links below for Bluffin or 2bit. Either of them are offering great rewards, including a Rolex, a MacBook Pro, a Nintendo Switch, or an iPhone on Bluffin, and on 2bit up to 30,000 depending on deposit and trading volume. Thanks so much for watching. I'll see you in the next one. Remember to hit the like. We need to get to 1,000 today. Thanks so much. Bye bye.